So, but when we look at the data collection, we look at why do we do it. So of course we collect it for analyzing, we collect it for the measuring and KPIs as we discussed previously, and we to discuss of the types of measures that can be put in place in different development phases from the side of the companies and talent moving within the ecosystem, and then the support service processes around those support functions. And we ended previous module looking at the data dashboards to looking at more holistic perspective of how that kind of analytics can look at ecosystem level from different development phases and looking at different KPIs from different perspectives, from velocity, from quality, from volume perspectives, and from different development phases, and then also from what elements are we looking those from. And then the comparability when we build more shared models and shared standards, it become comparable between cities, similar regions, similar support services, support models in a same development phases based on the startup stages and so forth. So this was the type of visualization. This is not an application dashboard, but this is the point to show in a matrix type of chart how then further analysis can be applied to looking at aggregated views of those development measures in different levels. And when we go to data collection, we come back to the key actors of startup ecosystem. So we look at the support functions. So we have the organizations and their specific support service processes that can also be like funding instruments with application, grant of funding or not granting funding, evaluating the applicant and so forth. We have policy level, of course, there as well. That starts to be more on the economic development level. Then we have the individual startups, and then we have the people who create those startups. So the individuals versus the entities. And the data collection, basically, we have this accountability approach. So when we align these, there is a value chain that goes from, this is basically the bottom up or top down put on the sideways, where you have on one hand, you have the economic development that is a broader umbrella to contributing for support functions or private and public ones that then support the companies, of course, startups, and before startups, they're also individuals. But then in these startups, there are the individual people working there, whether they represent talent, entrepreneurs, co-founders, employees, business angels, and so forth. So really, if we put the segments here, we have the ecosystem level perspective, then we have the support providers, then we have the business creators. So the basic logic is that everyone is contributing something for the next level. So the support service organizations are getting public finance to run their operations, whether it's project-based funding or whether it's non-profit being tax exempt so that they're not paying taxes and therefore they can get incentives from the government side and so forth. And then the support operator gives either free services, subsidized services, free advice, they give grant money, equity-based money, but they give something to support the startups. And then in the startups, again, for the individual, they are giving salary, they're giving equity, they're giving something where the individuals are taking risk or working towards the startup success. And there's this level of getting something out of, or in each level giving something. And in return, Of course, if we work in a company or in a startup, we use tools, so we report separately on progress that gets collected, that information. And when a startup is making progress as part of the support services, they get something, it's totally fair to ask them for information, as long as it's not painful to give, so if it's not disruptive for their work. And the support organization, when they get incentives from the government, from the economic development programs, funding, whatnot, they also can give return data. And typically these exist in the markets in different levels of detail and different levels of functionality, but the general process is there. So it's not something to reinvent, but to improve. The most painful stories that we hear is where there are heavy reporting responsibilities, which are totally justifiable, specific in the, for example, in the support function role or organization, because it's spending, general public, so citizens' money. Being citizens, being individuals and companies, it's only fair to them to get real transparency of what is happening with the public money. So it's understandable, but the pain comes from having, the worst case, having manual PDFs to fill, or even, manual reports that are information heavy. And then once those forms get, in the second place, that data is not really used for full of its potential. So, and so forth. So this is really the value chain of data collection. So there is incentives in place, and there is a fair process to get the data flow. But the key again here is, as we looked at earlier, is how to make that more standardized, more automated, more effective, and really flowing, so that the data and the information can be collected where it happens, and the data can also feed not only the previous party, but it can feed any party that would improve their visibility over this value chain. So really having a data infrastructure to capture, manage, and share that data. And that is the structural perspective between these different functions and the value chain. So then when we apply the same thinking based on more shared standards between actors, we get more into global benchmarking. So the things that we discussed about in the previous module extensively. So you can compare results between other regions and ecosystems. You can compare results with other startup support services, or you can compare your progress with other startups in different markets. And of course, the accuracy of the data can be separate from the identifiability of an individual company or startup. So while the data can be very accurate or correct, it doesn't mean that all of those startups can be identified, for example, if that's not what we agreed to, or that's not what the startups agreed to. So you can't necessarily look at your individual competitor, but you could see similar startups in similar industries. What is the progress pace? What types of valuation do they have in their companies in the successful funding rounds, and so forth. So there's a lot of different values that can be extracted by committing to more common practices. So really finding answers to questions like what's happening in a specific industry, what phases are the startups currently at, what are their velocity, meaning their progress between development phases in general in our ecosystem compared to others, or individual industry compared to other industry within our ecosystem, and really looking at this from volume perspective, from quality perspective, from progress, velocity perspective. And of course, ultimately, it comes down to that return of investment spent, specifically public money spent on innovation support services. So when spending public money for transparency and accountability, to really get real metrics and not this kind of vanity metrics or made up reports based on assumptions or surveys that are more of the secondary data, or the worst cases where KPIs are created at the end of a project when the reporting needs to be done. So, but you can really see all these types of things happening in the fields and in the markets, and it's unfortunately common practice in many places. So where to invest to further improve and accelerate? So having the perspective from the efficiency, not only from what's happening, but also what are the outputs of the development initiatives happening in the ecosystem. What startups to promote, showcase to global investors, so how to find the best ones for when international delegation comes and wanting to showcase your best companies. How do you know that they are best companies? If they come from an industry, specific industry, they like to know what's happening in industry. So what are the most interesting companies? Say not only the ones who are currently already successful, but what are some of the newest things coming with the great momentum, while they may not be significantly big yet, but they are working with newest technology, with most proven momentum, making progress regardless of their development phase. So the easiest analogy that I like to use usually is sports. So who are the rising stars? Who is the next most likely Formula One winner currently driving somewhere in the kart series or Formula 3 or Formula 2? What is the visibility of these types of activities in the context of ecosystem, and to what that view is perspective to if there is no data about their lap time is compared to their equal peers in age or history of how long they have been driving. And you can pick any sport. You can pick football, you can pick fencing, you can pick tennis, you can pick any sport, and there's huge statistics available in every single country from their favorite sports, from junior leagues and so forth. How does that same data look when we talk about developing our economy to improve our jobs or to improve our climate change initiatives through innovation? Where is that data? That's the question. So if we compare the methods and availability of different types of data, we don't have to look far to know the benefits, and we don't have to look far to know how much of that data actually impacts the visibility to see what's coming and what's happening. So two types of data, open data and by permission data. So initially to apply metrics to get data for own needs. So whether that's records of CRM or whether that's measuring any of the KPIs, but then opening selected data to the world as open data is just basically like the public sectors are doing in many other industries. Is like, if we have no reason not to open, then we open it. So it's not from the perspective that what data should we open, but having a core principle in place that if we have no reason not to open, then by default we open. To attract investments, to help startups to be discovered, to help scale innovation, and then more data by permission access. So that can then be as any as detailed data. It can be startups' accounting data. It can be their invoicing data. How much they have invoiced. It can be subscription data. It can be their Google Analytics data. How many visitors do they have on their website? So the question is, what information could be made available? What information already exists? Who should get access to that? So most likely an investor. Investor would be interested, and they will get that information anyway. Otherwise, the startup will not get money. They will do their due diligence. So it's not that it doesn't happen, but all the processes are just not efficient. And then access open data from elsewhere. So that's when you are on the receiving side, compare your city performance to access innovation from other markets to solve local problems, and so forth. So when we go to the use of data, so it's obviously not only for measuring, but it's also to attract investors. Big companies do benchmarking, do partnerships, collaborative development within the context of shared business vertical ecosystem, like in agriculture. For example, high impact of our environment. So collaborative improvement in agriculture sector innovation could be a big collaboration effort. So the real key point when we look at the digital alone, so if you just the same way as the example of empty CRM, that's if your ecosystem is empty from data, it means in the digital world, things don't exist. And that's as harsh as it can be if we look at the digital economy in more broader sense, is that how to make things to exist and exist in a quality way in a digital world. So intelligent data for startup fundraising as an example. So startups today compete on a global level for investors in interest. Sometimes when working a lot with the support services, we forget that investors, yes, they actually really want to find good startups to invest. And there are some, like you've seen, also big, crazy cases where maybe they weren't that good, but huge amounts of money have been invested. Every year, there's more money to be invested into startups, and it's like venture capitals and business angels' job to actually invest that money. Well, angels, it is more voluntary, but for VCs, it's their job to invest. So they really do want to invest, and they look and they have to put that money to work. But how to make that really their job as easy as possible, as data-driven as possible, is what the government and support functions can do. So the challenge for global investors is to identify a good deal flow, cutting through the noise and volumes. And really, they want to find them anywhere in the world where that is happening. And to leverage then more intelligence data to meet the investors' requirements. And also to engage investors further, the types of information is like about exits, startup success stories from data perspective, not only like they are really good startups, but how does it look in the form of numbers? Startups that have transferred into real companies. So like all of those numbers visualized in an appealing and effective way is really what works. Investment activity in the region, market opportunity, attractive industries and sectors for startups and investors, underlying tractions, key performance indicators. So when startups, some are successful, is there deeper data to look at why they are successful? What's different from the perspective of data? Financial and operative metrics, so getting data out of Google Analytics combined with their project management tool, combined with their subscription system in Stripe. So startups, unique selling points, differentiating factors, competitive advantages, scalability, global nature of products, clients. And a lot of the startups are already very transparent, like they really do want to share about their progress because they understand that that is one way to build inbound attraction by investors and even team members. So they are, blogging and tweeting and sharing and pitching. So this is again, it's not that they wouldn't want to do that. They may put something per permission, but the key is really that someone has to start putting, the sports tracking in place for the ecosystem level. And the same applies for attracting big international companies. So this is also from the perspective of seeking for exits or seeking for partnerships, or seeking channels to build companies to global markets. Big companies are constantly doing, they have big difficulties in keeping up with the pace of innovation, what's emerging in different industries in different parts of the world. Smart big companies are moving towards open innovation and tapping into innovation by startups. You can look at any multinational company and they have innovation or startup programs in one way or the other, being that co-working spaces to accelerator programs, to corporate venture funds, to innovation competition, to hackathons. And all of that is basically there to replace because there is no data available. It's because it's not collected. So a lot of these activities are done to replace manually things that could be there in a different approach, but at the same time, those activities that are being done, they are not collecting data and they're not sharing data because no one's looking from that perspective as a ecosystem orchestrator or ecosystem operator. So innovation by startup is fast and cost effective, more open and more exposed to market feedback. So these are more what we discussed already earlier. So I'll stop here just to check if there was a question. I'm not sure if there was something. So let's check.
We don't have anything, Malto, from attendees.
Okay, so if someone is wondering like why I'm asking all the time, sometimes my system prompts, but it may be something else as well. So anyway, so let's continue. So the business case is one of the earliest startup ecosystems that we started to expand. This was end of 2013, 2014, when we started to expand the ecosystem development concept for beyond just one ecosystem. So really bringing it more as a globally neutral work. So we one of the first ecosystem development efforts we did was with Startup Estonia. And at the time, we already applied the foundational perspective. The pieces that we had were the framework around the ecosystem development, built around the startup development phases. As one of the outputs, afterwards, they implemented a startup ecosystem portal to communicate the information about the startups they have in different development phases, as well as the services available to startups at different development phases. So two-sided mapping exercise and building a simple website to communicate that information to everyone in the ecosystem and everyone outside of ecosystem. So having very simple categories of companies, TransferWise, Pipedrive. So I think TransferWise is pretty big at the moment, and also shows in the numbers that they were openly collecting and sharing. So the Estonian Mafia was the bottom-up actor. So Startup Estonia was the top-down actor, and the Estonian Mafia is the bottom-up actor. So they did a manual process to collect the information and record the funding rounds and the progress. And this is the typical how a manual system looks like. So basically collecting through crowdsourced activity. You can see it's Google spreadsheet shared by multiple actors currently interacting with the system and collecting that data. But nevertheless, the key is the data itself. You can see there on the different tabs per year. And of course, this is very laborious, but even with that type of manual approach, it's extremely successful and powerful, and has been for Estonia. So anyway, the outputs has been the ecosystem players talking the same language when it comes to Estonia startup ecosystem development, common framework for ecosystem players, things that are measured gets improved, manual data collection process to understand why it's needed to be collected. And why is the manual process there? Initially is to validate the concept, of course, and the benefits, but at the same time, as it usually goes, there isn't, money and budgets hanging around to necessarily convert once you get that going and someone says, oh, but that's already working, because not understanding like what is the next level of development. And then the organizations change, the project funding disrupts the ongoing path of development, and people change their job positions, and that's the challenge when there is no ecosystem operator organization in place, that the progress becomes periodical by one group of actors, and then when things mature, people mature, the progress may actually stop. And the worst things would be that it actually starts to be repeated totally from the scratch by some other actor. So the types of data we just to kind of have a summary of that. So the ecosystem data refers to information that is collected from the ecosystem via of various systems and applications and interactions between people and services in online and offline settings, where this information is automatically captured and or manually recorded into various different applications, databases. So we have the data, and then what we can do with that, we can educate, inform about needs, identify target items, we can develop priorities based on data-driven decision making, we can acquire resources, obtain funding, develop policies because we know what we need to do, we can evaluate programs, and so forth. And basically there's always two types of data, primary and secondary. Primary data is collected directly from the interactions, so this is like real applications. So existing CRM records, existing event registration system, from existing project management software, from existing accounting software, the primary data goes in. And the secondary data is when someone tries to manually collect and ask this information from someone to send it to them manually, or they do a survey based approach. And for example, the startup genome, the global startup ecosystem ranking is fully done based on survey data collected from multiple support organizations to submit information, and then there's the similar data aggregation and cleanup process and so forth to be done, but it's not based on primary data. So that of course obviously influences also the accuracy of who are the actors actually responding to that data, how accurate is that information that is entered into the system to be analyzed, and so forth. So the source and the approach is to focus on primary data and build systems that are with the same effort and almost with the same money as doing the manual effort done into directly digital repeatable around primary data. And then of course we can also have qualitative and quantitative data. So qualitative is more data that can be measured or can be counted for to answer questions like what, who, when, how, and so forth. So the qualitative data can tell us what is impacting our ecosystem, but it really can't tell us why. And then quantitative data is more applied on top of that. So it's more analytics or further research into those topics, listening, observing people and services, recording perceptions of how feel and so forth. So this can be feedback forms, questionnaires about different things. And this is typically also based on more of the secondary data. But depending on how the systems are put in place, if it's a system instead of one-off collection, even the quantitative data becomes much more accurate and useful because it's always the same format, regardless of people and views.